When looking for solid long-term investments, investors look for trends. And simply put, the trend for NIO, well, it's up. Hi everyone, for this video I want to give potential NIO investors a clean overview of NIO's finances, where they currently stand, where they will stand, and how long they can survive at this current rate, given their revenues, their debt financing, and NIO China. If you haven't already, go hit that subscribe button. I'd really appreciate it. I do hate saying that, it's the worst thing in the world. I have been and will continue to keep up with all things NIO, news releasings, press briefings, earnings reports, anything and everything you as an investor need and will want to hear. Okay, so pretty much for the entirety of last year, and especially during Q1 of this year, if you were a NIO investor, you were probably shaking in your pants. February 2020 marked an extreme low for the company, with only 671 ES6s and an even more dismal 36 ES8s sold. Funding was not going well, they were billions of dollars in debt, and they pretty much weren't generating any revenue whatsoever. They were searching far and wide for additional funding, looking for any sort of investors, but potential investors just weren't sold. They weren't sure they were going to get their fair share of a return potential back, and deals were just not being struck. NIO eventually bought itself a little more time above water with an additional $435 million debt in the early months of 2020, pushing them even further into the red. Now, many investors were panicked, but it's important to remember that in today's day and age, with competition being fierce, challenges were indeed to be expected. However, the company was hemorrhaging cash. NIO eventually issued a warning to its potential investors that continuing operations with a lack of funding was going to be extremely difficult. Liquidity was becoming a major concern when they only posted $338.6 million in cash. So I know NIO is receiving many different facets of cash infusions right now, but I want to talk and highlight three in this video, that being their revenue, a debt financing agreement they just settled on, and lastly, the subsidiary company NIO China. All right, so let's start with what was essentially a life raft in the stormy seas just a few months ago. This is NIO China, the life raft. In late April 2020, NIO received approximately $1 billion USD in cash from local authorities, forming a subsidiary company called NIO China. The local authorities and investors are positioned within a city called Hefei, and this is in central China, and they would be receiving a 24.1% stake in the company. The cash infusion from the local authorities and investors will be distributed within 3 different installments, 2 of which have already occurred, and the last taking place on or before September 30th, 2020. So NIO China, based in Hefei, will comprise of research and development, supply chain, distribution, and a different subsidiary division of NIO called NIO Power. Now, NIO Power is basically the division that's in charge of all things battery. The battery and research development of the battery itself and of the infrastructure surrounding these battery swap centers. It's important to note here that if NIO doesn't hit predetermined certain benchmark figures within 5 years, the NIO China investors can take their shares, can basically crash out their shares at an 8.5% premium. All right, so now we have an idea of the local authorities positioned in Hefei and the somewhat bailout that they performed on NIO in April of 2020. Now let's move on to NIO's revenue. NIO as a company generated $1.12 billion USD throughout 2019. This was a massive increase from just the previous year. They only generated $700 million. As I said before, investors are looking for trends, and this is a trend in the right direction. So NIO generates revenue from 2 different streams. Their first being their automotive stream, and their second being other. This is the division in charge of actually selling the cars and generated the vast bulk of revenue in 2019, selling and distributing the electric vehicles. This generated $1.06 billion USD. This division, other, is everything in charge of batteries. So this being the battery swap technology and servicing of people's batteries. I'll get more into that later. Now we can see throughout their 2 different divisions a massive change or delta in the revenue generated. And I think this is a very important fact right now. Their battery swap technology is in its infancy. They're dominating this new sphere, this new idea of swapping batteries. And I think this is going to be so lucrative for them in the future. Because their batteries are actually replaceable, this opens up a vast market share of the consumers in China. And I'll tell you why. In a bruised economy, if you're not making the same amount of income you had, but you still want a new car, you might need a new car, you can essentially buy a cheaper car with a cheaper, shorter term battery already installed. Therefore, the bulk of your purchase goes to the actual shell of the car, and very little of that purchase goes to your low density, low grade battery. When the economy eventually improves and you want let's say a better battery, one that can last longer, you can essentially go to one of these stations, remove your battery, and then lease or buy a better battery. Therefore, I think NIO is doing a very good job capturing and gaining consumers away from other legacy brands, and are essentially gaining these customers who will be using their battery charging stations down the line. The more NIO users they have, the more this battery revenue stream is going to generate. Because they were spending all this money up front actually building the battery technology and the swap stations throughout all of mainland China, they may be able to leverage this fact in the future. Once the infrastructure is already there, many other companies won't have this capital or this desire to build their own charging stations throughout mainland China, and will probably use NIO's pre-existing infrastructure. NIO will be gaining a share of every single battery charging replacement and leasing of their own batteries. I think this battery charging station is really a dark horse in this whole picture and can really generate some serious revenue in the coming years and decades. NIO's vehicle sales have also been fabulous. Sales are expected to grow by 65% this year. NIO is also prepping to distribute their EC6 later on this year, and I expect this to greatly increase the revenue year over year. NIO's largest vehicle, the ES8, underwent a revamping program, becoming better in virtually every single way. However, vehicle sales didn't represent this. Their even older, yet smallest vehicle, the ES6, still outperformed the ES8 in terms of sale. This is showing that consumer sentiment is preferring a smaller vehicle. This is very good news for their EC6 that they are distributing later on this year in 2020. This will be their smallest vehicle, which, of any indication from the past, will perform better. It's a coupe SUV. I love it personally. If I lived in mainland China, who knows, I'd probably have one. On top of this, the government subsidy for electric vehicles will still apply to NIO because they have a changeable and removable battery. This will hopefully incentivize even more people to turn towards NIO rather than these older legacy brands. NIO has also secured recent funding in the form of a debt financing agreement deal. On July 10th, NIO released a deal stating that they had secured a $1.48 billion USD debt financing deal summated through 6 domestic banks. All 6 of the banks are in fact national, state-owned commercial banks operating within the same province where NIO is based. I think this was an extremely necessary and strategic move that NIO had to do. Past vehicle manufacturing business models have shown that the only way to break into an already highly monopolized, fierce, competitive environment is to grow so fast, to explode out the gate so fast that these other legacy brands don't have time to adapt, react, and catch up to gain that share of the market back. This is exactly what NIO is doing. They are securing tons of financing, they are growing in revenue, people are jumping all over this company. From just a few months ago when it looked like they were almost done, almost out of the game, they have 180 so fast, and it has really caught investors' eyes. They currently have 14.582 billion renminbi in assets. I think they are secure for the near-term future. If revenues continue to grow, they can start getting out of the red, and they are trending in the right direction as we've seen in their Q2 earnings reports. Hope you enjoyed the video, guys. I wanted to give a clean slate of where NIO is securing its financing and where they lay in the future. I really do love them in the short-term future, and if they can survive a bruised economy, they can survive pretty much anything in my point of view. I'm really eager to see their Q3 and Q4 earnings reports, of which I will make videos of, so don't miss that. Go hit the subscribe button. I've been keeping a very close eye on them, and I will give you guys all the information you guys need to stay informed and educated about NIO. Hope you enjoyed the video, guys. Smash that like, do whatever you gotta do. Really appreciate it, and I will see you guys next time.